Good morning, traders. It's Friday, February 14th. Happy Valentine's Day. Hopefully it will be a green day for the markets, not a red day, but we'll see how that unfolds. So far, the markets are a little bit mixed. We have the Russell 2000 slightly positive. The other indexes are slightly negative. But again, we had a really nice pop and rally there yesterday. When we look at the 30-minute chart, you can see the SP 500 has dipped into these short-term oversold territories. We saw it a couple days ago. We've been stair-stepping our way out of it yesterday. And if we look at the daily chart, we've had this multi-wave correction to the downside. Now it looks like a bull flag pattern, or you could just say a rounding formation. And we got this top, or you could say a cup and handle, whatever you want to call it. They all kind of indicate the same thing. So put whatever label you want on it. Trading charts is more so just kind of, it's part art, part science. There's a lot of ways to see it and trade it. And a lot of ideas still and patterns still mean the same thing. So that's it in a nutshell. Don't get too tied into specific prices and exact what type of chart pattern it is. It's just, is it a bullish chart pattern or bearish chart pattern? Is it a topping formation, some type of bottoming looking formation? That is really it in a nutshell. People who get super crazy overboard with labels, it's a waste of energy and time. It's just knowing if it's bullish or bearish. Anyway, taking a look at the rest of the markets. Yesterday we had a pretty big move in the bond market. If we take a look at TLT, we had a huge drop, like almost 2% the one day, and then back up 1.3% or something yesterday, or 1.75%. Huge move. Obviously, tariffs, CPI data, inflation, all this stuff is just wreaking havoc for kind of interest rates and what the bond market's doing. Everybody's trying to pick a bottom in it in the bond market. And I do think bonds will be a great play at some point. And eventually they're going to become part of our roster again. Believe it or not, TLT is actually one of the most powerful tools for us to pull money out of the market with our ACS strategy. And it has been out of favor since we've gone into this rising interest rate environment, which hadn't been around for like 40 years before that. So we have been kind of limping and running on one cylinder. But once we get back, which I do believe bonds will come back into favor and they'll be a great play, we'll be firing on all cylinders again and be able to pull a lot more money out of the market, no matter which way it's going. Even when the stock market is going up, we tend to see bonds have a very good trade when we have when our strategy gives us red bars in the market. We move into bonds, and bonds tend to move up in value pretty much almost the same percentage-wise as what the stock market does. So there's a lot of power in the overall bond market once it's favorable again. So that will be really nice once that comes around, which I believe will be this year. And we've been talking about that for a while, that 2025 is going to probably be a big year for a lot of chaos, economic stuff, stock market, and bonds will probably come to life, rise from the ashes, and become a favored play. Overall, if we take a look at the rest of the market, we have gold up a little bit this morning, continuing to reach for the sky. Again, that 3,050 is our upside target. Let me just see where that is. 3,050, 3,058, somewhere in that range. So it has room to push a little bit higher. That's based on Fibonacci, these big stair-stepping price actions that gold, just find that, here we go. These big stair-step bull flag patterns are pointing to, and gold is kind of that global defensive kind of play. We do have the dollar pulling back this morning, again, pulling deeper. Obviously, we've got tariffs, all kinds of stuff shaking things up. It has had a huge run to the upside since last October, and so it is having a big bull flag pattern that looks to be forming potentially an A, B, C retracement, meaning it's going to come down, pierce this low, if it didn't pierce it yesterday already, and continue to kind of flush out with lots of volume. Typically, when we see lots of volume, it indicates either a major market top, major market bottom. If it happens way up here at a top, then it can signal a top. But this looks like we got lots of fear and shake up, and I think we could hopefully see this turn into a nice bull flag pattern, flush itself out, and then eventually end up going quite a bit higher down the road. If we take a look over at crude oil, it's up 0.75%. It's been all over the place, big pops, big drops, trying to figure out what it is going to do. Natural gas up 3% today. It's continuing to, it was up really nice yesterday, pulled back. I talked about it, how it has kind of lost its uptrend. Somebody was saying, well, how do you see natural gas in a downtrend? Like they're like, where do you see lower highs and lower lows? Which I did talk about it. We've got obviously lower highs here. We have lower lows here. So that's pretty straightforward. We have a series of nice rising mini bull flags. I talked about how this looks like it's 3 surges to a high with a huge volatility in here. There's a couple sharp drops and pops, and we've broken down through 1 support, 2 support. You could argue here 3 support, and now we're rallying up into resistance. So this looks like a rounding top. This looks like a broken limb, a broken arm, I call it. It's just trying to stretch up. It doesn't have a lot of muscle to it, and then it's going to collapse and then repeat. So you have bull flags, and then we go bear flags. And if we take a look at the 30-minute chart, we have gone from green bars for natural gas to getting oversold to actually breaking the short-term uptrend to orange to red bars. And as you can see here, we now have red shaded areas in here telling us that natural gas is technically moving up. You can see just right here, right from where it went oversold and flipped trends is where now we have overbought and potentially a move down. So I'm bearish on natural gas. This definitely looks like it's everybody seems to be really bullish on it, which is even more so a bearish sign for me. People are arguing that natural gas is in a strong uptrend. But when we look at the daily chart, it's not. It's done damage. To me, it is in a downtrend and it's at resistance. But again, we'll just have to see how that shakes out. But that's my view. Obviously, everybody has their own view. A lot of people are looking at, I think the person arguing it was talking more so about the economy, economic stuff around natural gas. And yes, maybe it wants to blow off and have a huge move. But if you're looking forward at economic data and basing natural gas on it, we can very easily see a very sharp drop here and then see it take off, just like over here. This could be a warm-up phase, the warm-up move before we get into the more fundamental side that this person is saying. So anyways, that's just kind of my natural gas rant, and make sure you don't get caught up in news and what you think it should be doing versus what it actually is doing. Short term, it is rolling over and looking pretty bearish. Even on the weekly chart, this looks pretty bearish. It's done damage. It's bounced to resistance. It actually looks even cleaner to a move to the downside. Actually, probably very similar to this pattern over here, which if we were to zoom in, it put in a top, lots of volatility. It broke to the downside, had that move back up into resistance, and then it had that leg down, which I believe we're coming to a potentially sharp leg down. If we fast forward to today, a big leg down over here. All right, so other than that, not a whole lot really going on. We do have, let's take a look over at ARK-K. ARK-K had a nice move there yesterday. It popped up. It was a penny under our first target. It is now trading well above our first target. So if all goes well, if you are long the ARK-K ETF with our band strategy, your limit order should get hit today at the open. You'll get a better fill than what you wanted, so you'll make more on that trade. And then, of course, we'll send out an update and alert. You got to adjust your stops and all that. But overall, this will be the first target for the band trade. And then also we have our indexes are starting to break out. We got the QQQ looking primed and ready. This has been a really nice basing formation. The longer something bases, the more upside space it has. So we'll see if we can get a push up to our first target, hopefully next week. And same with the SP500. It's not quite as high as the QQQ, but again, very strong chart pattern. And as long as we don't get hit with news, we just keep getting hammered with news. And the market is resilient, keeps getting back up like a boxer in a ring, but it's been getting beat up pretty good, but it's resilient and it looks like it still wants to go higher. Again, our long-term trend is still up. We're in a bullish environment. When we look at the chart here, it is primed and ready for, this is a weekly chart. So a big week or two of upward bias, which should hit one of our targets at least. Anyways, that's it for now. Talk to you soon. Bye-bye.